Hello and welcome to Deal Flow, the show that tracks mergers and acquisitions on the continent and beyond. I'm Lereko van der Merwe. Private equity fund Lereko Metier has raised 690 million rand for its pioneering sustainable capital fund, which is mandated to make investments in the renewable energy, energy efficiency, water and waste management sectors. In this edition of Deal Flow, we'll be taking a closer look at the fund and the renewable sector as a whole. First, let's fill you in on some of the big deals of the week. South African IT services company Dimension Data, which is a subsidiary of Japan's Nippon Telegraph and Telephone Corporation, is looking at buying IT services units belonging to Nextira One. Oasis Group Holdings sold all of its 2.2% stake in Adcock Ingram on the open market, backing conglomerate Bidvest's attempt to block a takeover by Chilean firm CFR. Danish brewer Carlsberg upped its stake in China's Chongqing brewery to 60%, strengthening its foothold in the world's largest beer market by volume, and hopes to further increase its holding. Private equity fund Lereko Metier has raised 690 million rand for its pioneering sustainable capital fund, mandated to make investments in the renewable energy, energy efficiency, water and waste management sectors. The fund secured major final closing commitments from the Transnet Retirement Fund and the IFC, as well as follow-on commitments from the German Development Finance Institution, the DEG, the Dutch Development Bank, FMO, and the Public Investment Corporation. So plenty of support there. In studio with me to discuss the fund and the sector, the renewable energy sector as a whole, I've got Marc Immerman. He's an executive at Lereko Metier Sustainable Capital, as well as one of the investors into this fund, and Keppler, Vice President at Equity and Mezzanine Africa for the DEG. Welcome. Really good to have both of you here. So Marc, starting with you. So if one looks at the private equity industry in South Africa, it's still very much a case of it being a generalist industry. In other words, a particular fund will have a generalist mandate to look into financial, retail, various services, manufacturing and so on. So here is another example of some of the specialization we're beginning to see. So what are the opportunities specifically in the resource efficiency sector?
So as you've indicated, our fund is mandated to invest in renewable energy, energy efficiency, water and waste. Currently, a lot of the activity is focused on renewable energy. Our government is procuring an enormous amount of renewable energy projects, currently exceeding 100 billion rand, which is wonderful news. And within our other sectors, there are pockets of investment. Waste in particular will be very interesting. Water from an efficiency demand management perspective, and energy efficiency, as everyone knows, is booming growth thanks to Eskom's increasing price.
And so you as one of the investors and one of the early investors, so with a private equity model, it might take time to raise the capital, but as a development finance institution, you see it as part of your developmental mandate to come in right early at the fund. So what are the opportunities that you're seeing not only in this particular fund, but also in renewable energy and resource efficiency in South Africa?
The opportunities are plenty, and especially on the African continent. So sustainability and clean energy, as well as good environmental standards, are core to our mandate as a German development finance institution. So we want to support companies and even developers in producing clean energy, and that ended up for DEG investing over $500 million in renewable energy globally during the last time. So having a complete portfolio of 6 billion euros, that just shows the importance and the relevancy of sustainability and clean energy for DEG. And Lereko Metier Sustainable Capital already includes sustainability in the name, and it's one of the mandates. And for us, it's important not only to focus on the large developments, but really have water and waste efficiency treatment plants to say where can we support the development on using our resources better.
So Marc, in this renewable energy sector, I'd imagine that regulation plays a significant role and could be a potential risk for the sector. But at the same time, in South Africa, the way in which this REAP program has been managed, and you could explain it better than me, it's a renewable energy infrastructure procurement program. The way in which that's been managed, it's received high praise, so making it that much easier and more attractive for investors to come in.
Absolutely. I'm very happy to report that the procurement of renewables has been done in a world-class environment here in South Africa. The evaluation is transparent. It's done on 70% price and 30% economic development. We've seen prices tumble over the 3 rounds of procurement. to the extent now they are very comparable with baseload coal. As an example, wind dropped as low as 66 South African cents in the third round, and photovoltaics as low as 86 South African cents. I've been looking at the sector for over 5 years, and to know that renewables are now on grid parity with sort of fossil fuel-based energy is outstanding. So hats off to government. They've been very clever about the way they've structured this program. It's a lot more sustainable now from a pricing perspective, and thankfully for us, a lot of renewables have slowed down internationally. So we have best-in-breed partners to work with here in South Africa.
And there are quite a few players in South Africa and globally that have tendered for the REAP program and who are involved in energy efficiency. How do you select the managers? Because it's one thing to say this is your mandate, but I know the DEG in particular, well, I think all the DFIs operating here have a reputation for looking very carefully when they select their managers. What are they, say, the top 3 criteria that you employ?
It basically doesn't really differ that much from the generalist part. So for us, the most important is the partner and the relationship we built with the partner. So our discussion started more than 3 years ago, even before the official REAP was announced and before all the regulatory standards have been set. And it's really about how do you develop your pipeline? What are the transactions you're looking at? How do you really structure and manage the deals? For us, from a DFI's perspective, especially in this sector, it's not only about closing the transactions, sit and wait and be a passive investor looking for long-term infrastructure cash flows. It's more how do we ensure that good environmental and social standards are established, monitored, and we have a project which really meets our sustainability criteria on the whole range of values.
Having said that, what are the returns expectations that you might have? Because you're not doing this for nothing. You do want good market-related returns.
Exactly. DEG is not a for-profit organization per se, but we do have to fund our own equity, and we do have to break even and make profits to sustain our operations on those parts. So clearly on a long-term infrastructure project, returns are not as high as for generalist funds where you're looking slightly north of 20%. Because we're just having a much longer term perspective. However, on a capital multiple part, we are looking into those parts, and it has to be seen how we are going to exit the renewable program. But that's one of the advantages about Lereko Metier Sustainable Capital, as we are not only focusing on those large developments, but we have a portfolio of smaller transactions in the water and waste sector as well, which complements the overall portfolio well.
Sort of a returns kicker, is that the implication?
Well, absolutely. I think in the case of LMSC, it's very much a commercial project. Targeted returns are 25% IRR, so it's relatively standard in terms of private equity here in South Africa. And as Anne's indicated, there is some diversity. It's not only renewable infrastructure. I think key is combining sustainable investing with a clear profit incentive.
So you've spoken a few times now about the sectors that you've identified. Do you have specific pipelines, specific assets and projects that you've already started on?
Absolutely. As a house, and we're going back 5 years ago, we commenced development work on a concentrated solar project called Bokpoort, which achieved financial close middle of this year and is now under construction. It's a 5 billion rand, 50 megawatt concentrated solar trough. Interestingly enough, is able to store heat for an extra 9.5 hours when the sun goes down, which is important for South Africa considering the peak draws. In addition to that, we have an interest in a photovoltaic developer called AAMD, which are about to commission their first photovoltaic projects in round 1. And lastly, in the third round of procurement, we were successful with 3 mainstream Genesis large-scale wind projects.
So given the size of some of the projects, so clearly your portfolio will have assets of a varied size, you'd presumably have to work together with other fund managers, other providers of equity and debt, Marc?
Absolutely. In renewables, these projects are of enormous scale. Our fund is only 700 million rand, thereabouts in terms of close, so you will always interact with developers, IPPs, banks, and other finance partners.
And what we did, for example, in the Bokpoort project is that the Dutch Entrepreneurial Bank FMO as well as DEG, we co-invested alongside LMSC and provided additional funding to accelerate our meaning in the equity of the project, and working together with partners we already knew and we could support further outside even our core fund investment into LMSC.
And what's your assessment of the South African market and the opportunities here? I mean, the fact that you're continuously investing in South African private equity up to this point, you've got offices here, yourself, FMO, IFC, and various others. So that looks as though that's an endorsement for the local market and over a long horizon.
For sure. South Africa, as well as SADC for Southern African component, is clearly one of our main regions. And Mozambique is one of our target markets for the future, so-called future market within DEG terminology, where we want to invest more and where we want to look into it. So we really see the offices we have on the African continent as regional offices, serving the region and starting to develop business on the continent as such, and not only being focused on a single country.
Marc, perhaps final words from you. So you've closed this particular fund now. Now, as is the pattern typically in private equity, that there typically are say a second and a third fund. Do you see opportunity, say 5 years down the line, to raise a second fund in this genre?
Absolutely. Look, our fund is already about 35% committed. So I think it will be quicker than 5 years that we'll be coming back to the market for LMSE2. And given where the sort of continent is heading in terms of its energy profile, there's a definite slant towards renewable energy, and that's in addition to South Africa, where procurement is starting really up and down the continent. So we see a very strong opportunity going forward for a fund of this nature, and to be able to do it in a sustainable and resource efficient manner is that much more satisfying.
So Marc, to be clear, this first fund is South African focused. Or you're seeing opportunities further on for a Pan-African strategy?
We can invest up to 25% of our capital beyond the borders of South Africa, and we would probably do so in Southern Africa. So it's not Pan-African, but certainly not only South African.
Right. Well, Marc and Anne, thank you very much for your time and for your insights. That's my guest, Marc Immerman. He's from Lereko Metier Sustainable Capital, and Anne Keppler from DEG. And that's a wrap of another episode of Deal Flow. Be sure to join us again next week for your update on M&A transactions around the continent. Until then, from me, Erica.